Welcome to another Navia Freight market update. During these updates, we try to give you freight information that will help you make better, smarter supply chain decisions. We will be talking with our team members from all over the globe about sea and air freight markets.
Welcome, Giannis. Thank you for joining us. It's been a big month in sea freight. Last month we were talking about a spike in demand being the main driver of increasing prices. And it seems like now, compared to 4 weeks ago, things are becoming more intense rather than less. Tell us, what are you seeing in the freight market at the moment?
Thanks, Greg. I think you used a very precise word, intense, and this is exactly what we're seeing and what we're looking at specifically out of Asia. So it is obvious that we are actually into peak season, and quite rapidly we've reached there. There are obviously a number of reasons why we're currently experiencing what we're seeing on the market out of Asia, and I think that there are a lot of reasons combined together. So it is a little bit congestion related because there is some structural congestion being built in the large Chinese port the last couple of months. We are aware of that. At the same time, we had a couple of blank sailings. We had some additional port omissions from a capacity perspective. And obviously, we are seeing some additional demand and volume coming into Australia and Oceania, generally speaking, out of Asia, regardless if that is some sort of front-loading, replenishing stock, or purely demand based on consumption.
Yeah.
I don't think it would make sense to pinpoint any of these reasons. There seems to be a combination. However, what we need to understand is that, especially after COVID, it seems that what we had in mind are as the traditional peak season, the border lines between peak season and slack season become more and more blurry.
Yep.
It's a matter of embracing or understanding the uncertainty that we will be facing most probably moving forward, especially again out of Asia. And again, I will go back to your initial comments about things being intense. We need to be booking minimum 4 weeks in advance. There is a consistent roll pull from pretty much all major carriers for cargo coming, especially out of China into Australia. There is a small light at the end of the tunnel with 2 additional services being deployed from late July. We have both Maersk and the A3 carriers, that is all WOCL, Consequence, ANL, which are going to implement roughly around 6,000 TEUs of consistent weekly allocation coming out of the main Chinese port into East Coast.
Right.
So there is an expectation that things will get better. However, by how much, how long, this remains to be seen.
And I guess the fact that there's 2 new services rather than extra loaders or something like this being put in indicates that the carriers also expect the increased demand to continue for at least some time into the future.
Well, the carriers were, I guess, equally surprised. Talking to them, they were equally surprised as we are in regards to what we are currently experiencing. I don't think that anyone was expecting this to happen so early, meaning pretty much in June. But as you said, the fact that we're looking at extra services and not extra loaders highlights exactly this, that the carriers want to provide some additional capacity in order to mitigate some of the pain when it comes to loading and uplifting the containers.
Awesome. And then elsewhere, what are we looking like in, or out of rather, Europe and the USA into Australia? Any issues there, or how does that look?
Not really. Pretty much business as usual, I would say. It's just that everybody is so focused currently, rightfully so, out of Asia, because it's by far the biggest market regarding Oceania. Europe and US are doing well, considerably speaking. Same goes for Transtars. Maybe a couple of issues here and there, but it's more operational. It's not something consistent as we're looking, for example, out of Asia.
Awesome. Thank you very much for the update. Appreciate it as always. And we'll see you for next month's update. Welcome, Dave. Thank you for joining us for another market update. We spoke last month about things kind of getting a little bit more intense with the sea freight situation. It's been the same here in Australia. Seems like that's ramped up even more so. Can you tell us, what are you seeing on your side on the ground there in the US?
Yeah, no, it's certainly continuing to be a tough market as we kind of work into July. We are seeing pricing now that's basically eclipsing 24-month highs. We do expect a pretty significant GRI to be implemented on the 1st of July. And we think that's going to stick at least for the most part. I think some of the things that we are beginning to see, especially looking at the U.S. West Coast lanes, in particular the U.S. Pacific Southwest, like LA Long Beach, we do believe that the rate will increase on the 1st, but it's going to quickly start to fall. And that's because we've seen a lot of carriers introduce additional capacity with extra loaders, et cetera.
Yep.
But the U.S. East Coast and the U.S. Gulf Coast in particular are going to be very tough as we get through mid-July. Vessels are full. The carriers have implemented pretty strict weight requirements or restrictions on containerized cargo moving through the Panama Canal. IPI locations will continue to be under pressure. So we think that at least the first half of July is going to continue to be really tough. And then as we get into the second half of July, moving into August, we still feel like there is going to be a decline in the market. Whether that actually gets into the beginning of August, we will see. But the Retail Federation is still expecting year-over-year declines between 8 and 10% in volume in the second half of the year.
Yeah.
So we do think that this early peak season is exactly that. A lot of importers are pushing their POs forward. Initially, before July 1st, BCOs were doing it to prevent the increase in large BAF increases. And then the ongoing is really kind of being attributed to two factors. The first is the investigations that are being conducted by the U.S. Trade Representative into forced labor and unfair trade practices. There is an expectation that once those investigations conclude here in the beginning part of July, that if they're implemented, we may see increases in tariffs between 10 and 12.5% for the 56 countries under investigation for forced labor.
Right.
As well as up to potentially 25% in additional tariffs for unfair trade practices. The primary country that's being targeted there is Vietnam, which is big for the U.S. as a significant amount of sourcing moved out of China, and Vietnam was probably the largest growth country there in production. Yeah, the second reason is really just restocking, replenishment for a number of companies. I think they were, what we've been hearing is that the Q1, Q2 sales numbers were stronger than expected. So companies are restocking, trying to get that in early before the upcoming holiday period. So we do think it's going to be an early peak season, and expect things to begin calming down as we get into August.
And when you say early peak season, I was just thinking, so when you say demand tapering off in August, do we expect then for it to kind of level out towards the end of the year, or again another peak towards that, November, December?
That's a great question. I mean, I based on what I'm hearing and seeing, I do believe that we're going to just see it kind of taper off, and we're not going to see another peak season come into the market. Now, I think there are some variables there that may push that a little bit. If the U.S. Trade Representative investigations continue to be ongoing, and we don't see that initial increase in tariffs potentially in August, or that's pushed down into maybe September, then I do think importers will continue to push product once there's more clarity on kind of what those increases will be, and try to mitigate that risk and that impact. But I do think we're going to see a pretty significant drop off in demand as we get into the second half of the year.
Interesting times ahead. Thank you very much for that, Dave. Appreciate your insights as always.
Absolutely.
We'll see you next time.
Thanks so much.
Thank you.